Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined today by Ryan Littlestone, who is an independent FX trader. How are you today?
Not too bad, Matt. Yourself?
Yeah, very well, very well. Coming towards the back end of the week, it's been a strange week. North Korea, Donald Trump, and I think that's going to move things around after non-farm last Friday, jobs report at the start of the week. So let's have a look at a few of the trends today. Starting off with, as we mentioned, the dollar. Dollar index bid around 93.60, so it's had a lift up. How do you see the dollar going from here?
Yeah, it's looking a bit vulnerable at the moment still. What we seem to have, like you mentioned with the jobs report, is you get a good number, especially in jobs, and the dollar rallies and shows there's still buyers out there, still hanging on for the next Fed hike. We saw that again with the jobs report, brought a good number. It doesn't hold it. It doesn't hold its gains, and that's an issue that we're finding. And it's been going on for a few weeks now, and we're slowly seeing it keeps making lower highs and making lower lows. So it's creeping down, and it's going to get to a point where if the pressure builds up, it's going to have one of its little blowouts, I think. But definitely the dollar is not looking as strong as it used to.
And it's interesting with the whole North Korea thing going on as well. Usually you'd see probably a flight to safety and the dollar becoming more back into favour, but that trade really hasn't played out.
No, it's a strange one because North Korea's a crazy box of frogs at the best of times. But the worrying thing is that you used to get a missile launch, or you used to get comments from North Korea, then it'd go quiet for a few weeks or a couple of months, then you get something else. But what's worrying me is that the news out of North Korea is becoming constant. It's almost becoming an everyday thing, and that's something I think the market is now picking up on. And you're going to get your flights to safety still to yen and to the Swiss. But we're in summer markets, so you have periods of doing nothing in 10 pip ranges, and then suddenly you'll get a headline from North Korea, and suddenly the yen's being bought, the Swiss is being bought. But you never know. Is the US going to get directly involved, or is North Korea going to keep threatening to attack elsewhere? So you don't know where the safety play is going to be. And one thing you look at is probably gold is probably the biggest safety play of them all. So if you don't know whether it's going to be the Swiss or the yen, then you jump into gold.
Yeah, and we've seen that rise in gold this week. Again, euro dollar weaker on dollar pickup. And as you mentioned, vulnerable risk aversion surges. So Swissy and yen are two key plays as well.
Yeah, I mean, the euro dollar is an interesting one because we had that really strong rally over the last few weeks. And when you get a rally like that, I mean, the 1450, 1500 level was a big resistance level. So when that broke, we were obviously going to get a big push up. We found a top up near 1900, and I think that it's partly dollar strength, but also it's a big rally that's just run out of steam for a bit, and we're dropping back on that, we're tracing that. If we break below 1600, then it could be a steeper fall, but that's probably the range we're going to maybe see throughout the summer, sort of that mid 1600s to up to 18s, 19s.
Understood. And cable, low end of the range, we're back again below 130. We had some actually stronger than expected UK industrial production numbers out earlier on. But cable below 130. There were a lot of people bidding it up when we were up near 130, 150, 132. But now, below 130, and there seems to be a short-term trend to the downside for cable. Yeah,
I mean, it's always a surprise when you see it go so high. And, it was up at the 132s before non-farms, and that number seemed to torpedo it and send us on our way back down. But then you're never too far away from Brexit headlines and Brexit news, so whenever it rallies and all you need is one little headline, throws a bit of negativity in among remembers that Brexit's still there, and they're happy to hit that sell button, and it's probably still a good rally seller at the moment until we get a clearer picture on that.
And we've already touched on yen, dollar, yen. Again, in that range, that risk-off trade is there, but it's still actually a fairly tight range around the kind of
it is. I mean, there's levels which we've just briefly gone below that I was looking at, sort of the 110, 109.90. That was an area that we have to stay above. If the bulls are going to stay in control, they have to stay above there. And we had a little dip below yesterday, and then we've bounced back a bit. But we're back into 110 odd this morning, and we're still not cracking that bottom. If we have a close under sort of probably 109.80, 109.70. Get a close under there, that will tip the pair for another leg down, and if that becomes a strong resistance.
I understood. And just generally the FX markets over the summer, you've already touched on it, where there's volatility, Is there liquidity though, is the question?
No, that's the problem. You can sit there for 4 hours a day, 5 hours, and just watch a 10-pip market. And then suddenly you get a headline and boom, you get a 50, 60-pip move. Now that headline might bring you 10, 15 pips any other time when it's more liquid, but because we're in a lower liquidity time, you do get these ranges and you do get these quick moves. And it's difficult to trade because you get a big move, you get all excited, and then it sits in 10, 15 pip range again for another 2 hours. So it's very difficult. But what you do in summer markets is you pick your wider levels, pick the really strong levels, your technical indicators on the higher time frames. And if they're close enough, those are levels you want to look at because they're, even with thin liquidity, those are the bigger levels that are going to hold. And just pick your ranges, top and bottoms, and try and sit in between them.
Good advice. Right, finally, we have the economic calendar. There's a few bits going on, certainly from the US. Any highlights, anything that jumps out? Are you there?
Yeah, PPI is going to add to the inflation picture, obviously, which is the big theme in the US and with the Fed. We're looking for a slight tick up on the year-on-year numbers in both the core and the headline number in PPI, I believe. If it's strong, it's a bit lagging in terms of inflation, but if it's strong, it's not going to keep dollar traders from buying the bucket. It's a really strong number because they obviously think about the feed through into the headline inflation, which is later on this week. Dudley speaking as well, the Fed members, they like to jawbone. The markets are still looking, I think, for any inkling that they're going to get another hike. The odds of a hike have come right down from what they were earlier, but you get a hawkish comment or two, and off go the buyers, the dollar buyers, and they get in. But again, you've got to look at and think, is that a level to sell into because they're not maintaining these gains.
Indeed. Well, lots to think about, and we look forward to, obviously, the CPI number tomorrow. I think that may draw a bit of focus. But in the meantime, Ryan, thank you very much for joining us today.